This is the chart of GLD on the daily scale. The breakdown continued, and we can still assume, the way it looks here, that we are dealing with a 5-wave round with a somewhat stretched out here towards the support, and I still think it makes sense to treat this as an A. That will be our B. Any rebound back in the coming week should be taken as a B, to be followed later on, possibly in a week or two, with a waterfall collapse further down to deliver that C. I just want to remind you here on the idealized shape of things that we have, that we are working with a triangle B, with this being an A, that's a B in place, that's a C in place, and we are now looking at the D unfolding. It should be something that will occupy us for several weeks, at least several more weeks, and ideally should, the descent, if you get that descent, should stop around here, only to allow for another final bounce before a complete shock drop under 1,000. Okay, I'm not taking any fundamental factors in this analysis. I'm simply following the price movement on the chart. If I begin to take the fundamentals into account and other views, and I'm not necessarily going to make a better analysis. I'm just following what I see here on the screen, and simple common sense patterns that worked in the past. And there are no guarantees either way. We're only working the odds. Okay, that's all what we are trying to do. There is no crystal ball involved here. We're working with patterns that proved themselves in the past. And just for example here, when I was talking last week, if you remember, we had this, that's the 60 minutes now, and I was talking about this being a fourth wave that will most likely lead to a further drop. Well, look where we are. So yes, it did work. It did work, and now the pattern on the higher scale is encouraging us to consider that a rebound is coming. Okay, on the 60-minute scale, we have now reached here a zone of support, and that's basically what we would expect, in a common sense interpretation, using those patterns that we are so used to. I just want to highlight the weekly projection here. So I don't think that this market is ready for a total collapse, if you ask me at this point. The GLD and the gold chart, spot gold, they're looking slightly different than silver. Silver might be harboring some dramatic surprise. We'll talk about this in a sec. But as far as the chart of GLD here and gold, you will see this is still a tenable interpretation. Yes, we're just going sideways, and that should, according to the time scale we're using and the pattern involved, that should actually drag on for several more months, even 1 year. Yeah, even 1 year would not look completely out of proportion here. Okay, just to be clear, I'm talking about the B that will end in an A, B, C, D, E like that. That would lead eventually to a Sears breakdown. Yes, Sears breakdown under 1,000. So that is the weekly scale of GLD. Now here's the chart of spot gold. That's the daily. And in the case of spot gold, I want to introduce interpretation that I really don't embrace at this point. It's something that could perhaps work. I will begin to believe that perhaps that is something that we should take seriously if we see a rebound in the coming week that settles about 1260, 1260. Okay, you always want to have the other side of the coin being examined. You always want to have an alternative. Here I'm talking about generally bearish to neutral price action likely to govern the action here in spot gold, but to stay completely open-minded to any sort of surprise, and then of course it's not that much a surprise anymore, is to say that in fact these ups and downs that we have seen here coming following a jump that looks like a diagonal first, all of this could be taken as a corrective to the first bounce. That leaves you with a very optimistic scenario that is 1, that is 2, and that's going to follow. Now, as I just told you, if we see something like that over 2-3 days, it jumps above 1,260 and it begins to build a base here, then I'm going to say, hey, wait a minute, the odds are shifting strongly here and quickly to warrant re-evaluation of the wave count. But if, on the other hand, after what I assume to have been here 5-wave run down, we just see sluggish performance, something like that, then in my opinion that's a perfect B. Do you see how I go about it? There is no roadmap that is a sort of fail-safe. It is all the time a matter of reassessing the odds. The odds change. You have to go with modifications. You have to be willing to accept the modifications. You cannot be rigid in your evaluation. It's just the wrong approach. Every tool, including the tool that I'm using, Elliott Wave Principle, every tool has its own limits, has its own good sides, bad sides, has moments. Here we have situations where the best thing to do is to say nothing, because the odds are just not adding up. You know, you want to get to a point where the odds are screaming at you, this is a good opportunity. Okay, right now all I can say is that it seems to me like we have traced 5 legs down right from the top. That appears to me fairly impulsive. I do think, on the basis of what I see here, that there will be now a rebound. 1,200, there is quite a lot of support in this area. Do you see? It's something that proved itself in the past. You see, there is support in this area. So after 5 legs down, my attitude is, hey, wait a minute, we're going to have now a rebound. And I explained to you the 2 types of rebounds that could take place. And of course I could be wrong. It could be that neither of them is going to take place and gold is not going to listen to me one bit, it's just going to continue down, which would be, as you can imagine, terribly bearish. That would be terribly bearish. And that would project potentially a drop, perhaps even a panic drop towards 1,120. Okay, so I hope that this is clear to you. If we jump back up here, then the scenario will suddenly brighten up, and possibly we're looking at a very optimistic situation developing. Yeah, that could perhaps be our 1, that'll be 2 right here, and perhaps 3rd wave evolving. Otherwise we're going for that B, to be followed later on by that plunge C, that ideally should not break 1,120, and down the road again, okay, we go for that, another ABC. In the case of gold, and I'll go here to the weekly, in the case of spot gold, I've introduced the positive interpretation that we had this as an A, that could play out as an A, B, C, D, E, in which case the B will end here, and that would lead to a surge C. Now you remember that in the case of GLD, it was the other way around. That was an A, B, C, D. We're coming down for the D, that's the E, and then we're expecting a breakdown. Do you see? It all hinges, in the case of spot gold here, on this level, which is quite critical, 1,120. And of course, on the way that gold is going to behave in the next several weeks, to see how and what patterns it's going to trace. Okay, here's a more problematic case of silver. That's the weekly scale of silver. First thing must be said that the fact that silver broke under the floor here and actually closed under the floor here is negative. Definitely negative. Yes, there is only one twist that I can think of that could still maintain some sort of positive touch on the situation in silver, and that is if my assumption on the weekly that this is an A would lead to a complex B taking place here, in which case, yeah, there could be a choice here that that's an A, that's a B with an A, B, C behind us, that's a B, that's a C, and then a D, and then an E. Okay, that could perhaps be shaping up as a triangle that is looking like that. Do you see? And then obviously the next very critical level becomes right here. Okay, that is immensely important. Breaking through that, I think there'll be really very serious shift in the odds. The bear, in my opinion, at that point will voice its intention, very serious intention of pulling the precious metals way lower for a long time. Okay, so please bear this in mind. This is mighty important, the level here. And we are not very far. The spike down here has been, if you like, an exaggeration of, I think that it was an intraday fluke move, if not registering a mistake. Yeah, that could definitely. It hasn't been cleared here on my data feed that I'm using. I'm using eSignal. The interpretation that I would suggest at this point that we adopt is we go down in an ABC. Okay, that could perhaps be this twisted C that I was talking about. That is to be taken as 1. That's 2. 1, 2, 3, 4, 5 nailed 5 legs, which terminates the third wave. If I go to the 60 minutes, you'll see that a bit clearer here. That's what I think is just a mistake in the data feed. And the development here looks to be 1, 2, 1, 2, 3, 4, 3, 4, 5. So yeah, there could be a slight touch on the lower ground here one more time, but then I would expect it to rebound. It basically stay range bound between 16 to 15.4, something like that. Yeah, over a period of time to trace that fourth wave. That, as you recall, in the case of gold, that's going to be our perfect B. And in the case of gold, we're going down for that C. In the case of this one, we could be going down for that fifth leg. Okay,